एक मिनट सर, आपके चैनल में यूट्यूब पे चैनल यूट्यूब.
Good afternoon, guys. Welcome once again back for a discussion today. So the last time we spoke on a structure product. Today we are here with you, bringing to you the ASK India Entrepreneurship Portfolio PMS discussion. A brief on the PMS. The PMS has been in existence for almost more than 5 years. It's been one of the PMSs on the multi-cap category, wherein today we have Mr. Nimesh Mehta, the head of sales and products and director from ASK PMS, to take you through the PMS details. So I would just call him upon to put you across with the information relevant on the PMS, on the product part as well as the sales part, to help you convert clients in due course of time. So help me welcome Mr. Nimesh Mehta.
So thanks, Deepak, and thanks, PL team. It's actually my pleasure to speak and be a part of one of the oldest equity broking house and one of the most reputed, I would say, research house, equity house in the country. So I will take about 10 to 15 minutes to run you through the whole 4 P's of the presentation I call about. The first P is people, product, process, and the performance. And I'll run each of them one by one. It's a very unique selling propositions for ASK. First is people. I believe, and I don't need to emphasize much in this kind of house where, when you look at equity investing directly into a stocks, you look into the CEO, the promoter, and do the investment. And it becomes furthermore relevant when you do your mutual fund or equity portfolio investment. You look into the capability of the people who are managing theirs, which is the PMS. In our case, this company, like your company, PL, was founded by 2 brothers, Asit Koticha and Samir Koticha. They founded this firm, and these 2 brothers bring in about close to 35 years of investment experience only in equity markets. Along with them was a gentleman, Mr. Bharat Shah, who founded the mutual fund business in the country, joined them as a partner in 2001. And so therefore, these 3 people bring in about 35 years of individual experience. Each of them brings in about 100 years of wisdom. And I tell you, it's so important because this kind of wisdom converts into philosophy to product, and then the process. Now, according to us, Bharat Bhai is the only equity manager in the country who has a track record of 28 years. First 10 years, he founded the Birla Mutual Fund in the country and then shifted, become a third partner to this firm. And last 18 years, a track record on the PMS side. So a total put together 28 years of a third party PMS or a mutual fund record. I think in my mind, there's only one person, which is Mr. Bharat Shah. Along with his 3 brothers, 3 partners, we have Mr. Pratik Agarwal, who brings in more than 2 decades of investment experience, and a 15-member research team with average experience about 10 years. So the all put together, we have about 200 to 50 years of experience or wisdom, which brings in. And I must say that it is this collective wisdom of these people, which is one of the biggest differentiating factor for us. As far as PMS is concerned, we are the oldest portfolio manager in the country. Our oldest PMS is way back in Jan 2001. That means about 18 years of proven track record. Again, nobody in the industry has an 18-year track record there. And that track record is about 21% compounded versus, or 20% compounded versus 12% for the markets. 8% outperformance for the last 18-year period of time. And we are also not only the oldest, but the largest portfolio management house in the country. Today, we have assets about 16,500 crores. And that makes it very significantly large. So that's the first P, people. The second is a product. Like PL, we also, we do our research, but only for our portfolio or management services product. This is a very interesting study, which we did in 2009. We studied the top 500 companies for the last 10-year period from 1999 to 2009. We found out there are 4 ownership patterns. First, promoter-led firms, which is nothing but an entrepreneur-led businesses. Second, public sector firms, which are run by government. Third, multinational firms. Standard Chartered Bank, Nestle of the world. Fourth, in terms of the professional firms. And they were tested on 4 different parameters. How's the top line growing for each of the companies? How's the bottom line growing for each company? When you say bottom line, we're looking at the EBITDA margin, we're looking at the PIBIT, we're looking at the PAT of the company. Third is the capital efficiency. How is the ROC and ROE of the company going? And fourth parameter was actual investment returns in the hands of clients, net of capital dilution. To our surprise, on all the parameters, promoter-led businesses were far ahead than any other form of ownership patterns. And we tried to dig a little more deeper inside and figure out that why is it that entrepreneurs end up doing much better than any other form of ownership. When we deep dive, we found out that entrepreneurs bring in or have their own skin in the game because they have 25, 30, 40, 70, 80% of the stake in their own businesses. And therefore, the passion, the rigor, the intellectual capital that brings in the business cannot be matched by the form of ownership. And I cannot debate or talk more about this in a PL firm, which is more a promoter-led firm that drive the business, the intellectual capital which the promoter brings in will be much ahead than any other form of ownership. To give you a simple example, to prove this example in a banking parlance, there are we have in a portfolio Kotak Banks, an entrepreneur-led bank. Second would be a public sector bank, would be an SBI or a PNB. The third is the MNC bank, not listed in the country, but say Standard Chartered Bank or HSBC of the world. And fourth would be an ICICI Bank. The answer will come out very clearly if you say how the performance of which of these banks has done very well over the last 10 to 15 year period of time or 20 year period of time. The answer will be very clearly in favor of Kotak Bank because of the drive which Mr. Uday Kotak brings in the business, which I'm just giving an example to you, that how entrepreneur-led businesses have been able to create a long period compounding wealth. We refreshed the study in 2014 again. So this portfolio got started in January 2010. We refreshed the study in 2014, seeing that how has been the pattern 2009 till 14 period of time, which was one of the tough periods in the country. Even in that period of time, what we found out that entrepreneurs took ownership of their businesses. They negotiated with the contracts with the clients. They did everything possible, cut costs, but ensure the profitability of the shareholders or for the company. And therefore, now we have a 15-year track record of our performance, which is, first 10-year, 15-year period, and entrepreneurs, the right set of entrepreneurs create a long period compounding of wealth. This story got proven by Credit Suisse in a global parlance. Credit Suisse released a report in September 2018, just about a few months back, where in a global parlance, that is US, UK, Germany, Australia, they all, have proven that the family, CS family 1000, that's what they say, have created more wealth than any other form of ownership in a global platform also. Something we did study in India, which has been proven in a global platform or a developed economy as well. So this portfolio got constructed in around Jan 2001. So it has 8 years of proven track record. That's the second P. See, most of the people in the marketplace compete within a small cap, mid cap, large cap, value, growth, etc. This is one product which is very unique and it's a brilliant valuation. You go and talk to any client, usko lagta hai, he believes that it is his own story. He believes that this is the kind of, if he's a senior gentleman in a company also, he'll believe that, this is a story of their own company is there. So therefore the connect is very, very high when it comes to product compared to just selling a small mid cap or kind of story. The third part is the process which I spoke. The process is, again, we are the only manager in the country which is documented. So when you look at the presentation, you'll see how we arrived to 20 companies have been demonstrated and put in in a very simple format, which a client and a banker or a RM can understand very well. So we start with the top 500 companies of the country by market cap. That typically covers a little more than 90% of the universe in the country. So we start with that. Now, basis our study, we say we'll invest only and only in entrepreneurs, which has more than 25% unlevered promoter stake in the company. That brings down the universe to 306 companies. From the 306 companies, we will say we want at least 100 crores of profit in the previous 12 months before we put our money into the table. What it means is that we have a fiduciary responsibility to manage clients' money, and therefore we would not get into businesses or companies which has less than 100 crores of profit. Okay, we want to ensure that we are into a very liquid, we are a very high quality name and someone who has a proven. When you put 100 crores of profit, which means our typical existence for 10 years or more in the businesses to do that. When you put that, the universe comes from 306 to 210 companies. Then we talk about quality of management. When you say quality of management, we judge by 2 parameters. One is subjective and objective both. One of the way in our study, we believe that focused businesses tend to create more long period compounding of wealth than complex conglomerates. This is just an internal study. So if you look at Asian Paints, Pidilite, Bajaj Finance of the world, the more focused the business across there, the core competency of the business is there. Typically, they've ended up doing much better than complex conglomerates will try to do that. And second, obviously, with the experience and the wisdom of the management of the people I spoke about, with experience you come to know the character, the integrity, the which when put in the parameter, the universe from 210 comes to 123 companies. Now we put two very important parameter is which is called the return on capital employed in the business. ROC is nothing but both your equity which you bring in the business and also the debt part of the component of the capital. So if you add, just to put very simply, I mean people in this PL would know very well, but I'm just putting together ROE is on your 100 rupees of equity. If you get 25 rupees back, it is 25% ROE. But the difficult part is there when you say the debt which you bring in the business, that also should give 25 rupees back. So when you say ROC, we want on the 200 rupees, if you borrowed 100 rupees more, on the 200 rupees back, which is 25% or more. And therefore, only and only businesses which we have more than 25% ROC will put money. Just to give you the perspective, most of the people have lost money in equity market because they've invested into poor return on capital employed in the business. I was just reading a report a few weeks back, the Wealth Destruction Report, JP Associates, Unitex, RCom, R Power of the world, Suzlon Energy of the world. ROC of the businesses are 0% to 5% negative. JP would be negative. And in the longer run, our study suggests that stock price of the company cannot grow higher than the underlying ROC of the businesses. And therefore, if you see those businesses tend to not forget wealth, it actually destructs your own capital. So all businesses would like to do, just to give you a number, out of 6,500 listed company on Bombay Stock Exchange, if you put only one parameter, which is 25% ROC, then you will have only 210 companies. So universe actually shrinks down only on one parameter, which is about 210 companies, but very clearly, not a single business with less than 25% ROC we do that. So this, when you put that, the universe comes to 59 companies only. From here, we put two parameters. We say earnings growth of the company and the valuations. Buffett has wonderfully put stock prices as nothing but slaves of earnings. When you put that into come of our names in a portfolio, Kotak Bank in the last 10 years have given an earnings growth of 30% and the stock price has grown 30%. So when you say in the longer term, the stock prices and the earnings of the or come closer to our umbilical cord relationship is demonstrated in many stocks, but I'm just highlighting one stock in the portfolio today. And our endeavor is to find out companies which can give a consistency and predictability of earnings. We don't like company which is a very volatility earning. We like predictability and consistency of earning. The last part is the valuation. For each of the company we try to invest into, we try and buy to its underlying value. Now, value is intrinsic value is derived over a long period of time. I'll not go in detail of that. But every day, each of our portfolio company we create a long-term values derived, but the price is measured, and that's how we've been able to enter in there. But I would say that's not a very important factor. What is important factor is size of opportunity, ROC of the business, quality of management, earnings growth, and last come there. Just to give one quick example, who focuses only on the earnings or the price to book of the PE of the company, Kotak Bank has been 5.5 times price to book even in 2007, 2008. In the last 10-year period of time, if you see what SBI has created versus what ICICI Bank has created, what Kotak Bank has created, SBI has barely doubled. ICICI Bank has grown 3 times, and Kotak Bank has grown 14 times. So price to book or price to earnings, which people keep focusing nowadays, is not a very important parameter in investing. After we put these two parameters, we buy into 20 companies with almost 5%, 20 entrepreneur companies, 5% equivalent to each stock. Now, here is very unique from, again, what anybody in the marketplace. Each of our stock is close to 5% weight. At point in time, a 5% weight, so Bajaj Finance in the stock becomes 8% in the portfolio. Then you will shave off 3% and keep only 5%. So Bajaj Finance may not have been sold for the last 8-10-year period of time, but every time the risk in the Bajaj Finance increases, we'll trim it down and bring it to 5%, and the 3% will be allocated back to other 19 companies at the discretion of the managers, fund manager, or the investment company which does that. And that's how the whole process is followed. I said the third P is the process. It is not dependent on the manager. We continuously rebalance, trim the portfolio, increase weightage in the stock. That continues to happen, even though some stocks may not have been sold for a length of period of time. Asian Paints have not been sold. Pidilite not been sold. Britannia, Bajaj, Kotak Bank have been part of the portfolio for a long time, and they're there. The last peak comes in terms of the performance. We do the first three things right. If there's a right set of people with a great philosophy, a wisdom, will come out into the great product, which is a unique product, and a unique product with a very nicely culled out, accountable process. Performance is an outcome. So in the last, needless to say numbers, it's been almost among all the PMSs where there is negative 15, 20, 30%. This has been positive with about upwards of 4% in the last year period of time, versus when everybody is negative and markets also fairly flattish to do that. And it's not about 1 year period of time. I would highlight in the 8 financial years which Iep has done, every single financial year Iep has outperformed the benchmark. Out of 35, 36 quarters, 31 quarters outperformed the benchmarks there. There's been very little this kind of consistency of portfolio management services in the marketplace. And I think we feel pride, and we believe that because we do the first 3P right, I think performance and outcome. We don't like to sell, we don't like to pitch, and we request each one of you to also, when you go out to the marketplace, don't sell it on the performance. Because performance may go up and down, but what we can assure to the clients of the PL that if they believe in the ASK's people, ASK's philosophy, ASK's product, ASK's process, every point in time we'll be able to deliver on that. And if you deliver to that, most likely we should be able to deliver an outcome which has been similar to what we have seen in the past. So here is where I will end my initial conversation, and then we can have question answers is what we do that. Or there's no question answers format which you do.
So guys, thank you for being there. In case you have any questions particularly to ASK PMS, you can write us into wms@plindia.com. That's W Wealth Management Services. So it's wms@plindia.com. Thanks for joining in. See you next time. Bye-bye.